But moving on, before we talk more about the markets, let's talk about Asia's oldest stock exchange, the Bombay Stock Exchange. Now it turns 140 years old today, so there's been big celebrations at the exchange. The exchange, which started trading under a tree, Anuj, on the 9th of July, way back in 1873, is now the world's 10th largest stock market by market cap. So to talk about Bombay Stock Exchange's spectacular transformation over the years, we have two gentlemen. We have the present MD and CEO Ashishkumar Chauhan, who joins in, and we have veteran investor Ramesh Damani, member of the BSE as well. Gentlemen, it's a pleasure having both of you on our show today. Ashish, I want to start off with you. I understand you joined the Bombay Stock Exchange in the year 2009. So in the last 6 years, how has your own journey been?
Well, it has been wonderful. Basically, we have gone from what I call less speed to very fast speed. We have improved on the products. We were primarily a stock exchange. Now we also offer derivatives. We offer interest rate derivatives. We offer currency derivatives. We offer mutual funds. SMEs offer for sale. So we have become a multi-product exchange. We were also primarily Mumbai centric. Now we have, and we had around 700 members. Now we have around 1400 members, and most of them from outside. So we have improved on technology, on products, on distribution, and also on people. We have now people from across the spectrum, from the best and the most venerated institutions across the world. And so BSE is becoming a happening place now.
Okay, Ramesh Damani is also with us. Ramesh, thank you so much for joining us on this historic day of 140 years of BSE. Now, you have been a member of the BSE for 3 decades now. Tell us your experience and your journey.
Thank you. I think the BSE is today a 140-year-old institution, and it means a lot to me personally because this is my professional career. This is where I grew up. 140 years ago, the BSE was under a banyan tree, and today, of course, it's one of the leading free market institutions of this country. Two things actually stand out of the BSE. In the 1960s and 70s, there was this creeping up of socialism in India, and the BSE was one of the first institutions, and in fact one of the few institutions that stood always for free markets, private competition, a capitalistic system, a belief in the right of an individual to grow a business and stay in the economy, which was against the popular tide of its time. So when the tide changed in 91, when the liberalization program started, BSE was one of the first institutions that gave the risk capital to the companies that would become giants of tomorrow. Reliance, Infosys, to name a few. So in the sense that BSE's history is the story of Indian capital markets. My own journey began at the BSE in 1989. It was still a backwater, still physical outcry, still physical floor. But from there I've seen it evolve into a mainstream stock exchange, a very fast electronic trading system. On a busy day we used to do maybe $100 million trade over in 1990s. Today we do a few $1 billion. So it's been an extraordinary journey, and I think this beloved institution of ours, the BSE, has stood the test of time, and it remains the beacon of free enterprise, capitalism, individual good, which is sorely needed in our economy.
Hi Ramesh, thank you for joining us. I cannot believe that there was a time when there used to be an open outcry on a physical floor. I mean, so much has changed since then. The BSE itself has seen a big transformation when it switched to the electronic trading in 1995. But how did BSE brokers react then, because members were so used to the open outcry?
Yeah, because it was such an old system, the physical trading floor, the outcry system as we called it, there was huge love for it. But in fairness, I think time has proven that the current electronic system is more democratic, more fair, more inclusive. There used to be a lot of gap between the bid and ask, especially in the liquid shares. All that now has disappeared. So there was some resistance in the 90s when the BSE was moving electronic. But of course, then events overtook the BSE, and we moved quite sharply to an electronic trading system. But having experienced both of them, while we clearly enjoyed the physical outcry system, there is no doubt that the electronic system is now covering the nation. It's more inclusive, it's fairer, everyone gets a real-time price quote. So the BSE has changed with the times. It has been a bit of a struggle, to be completely honest with you, but I think today we are completely comfortable with the electronic system.
Okay, Ashish, what's your take on that? As Ramesh said, it brings a lot of transparency, but Do you think sometimes you miss that whole aspect of open outcry, shouting for rates, writing it on paper, something like that?
No, I agree with Ramesh that each and everything has its time and space, and so electronic trading actually changed that completely with NSE's advent, and BSE to take steps to ensure that it remains in the game, which it did very spectacularly. In fact, it's the only old style exchange which is now surviving and now actually growing. In fact, it has been taking up market share from the newer exchanges in currencies, which was not even thought about a year back because nobody gave a chance to BSE. So for me, it took some time for BSE to come into its own in the newer world of automation. But now it has accepted, and all its members are extremely comfortable trading on the microsecond speed that BSE gives.
Okay, we'll ask Ramesh this question as well in a bit, but Ashish, I wanted to ask you, I mean, a lot of market veterans, I understand, were part of that, that ring, physical outcry that used to happen, names like Nimesha, Radhakishan Damani, etc. But in your own experience, given that BSE is largely run by the broker fraternity, what are the challenges that, you have seen that the BSE has had to face, say, in the last 6 to 10 years with respect to execution?
Yeah, it was actually at that time because we were all a part of that ecosystem. We would all meet and talk daily. Almost the market was open only from 12 to 2 at that time. But even the speculators are known to be late always, would always come on time for the market opening and always be the last persons to leave the market. And I realized that they were so sensitive to the prices that even though they might be late to their own children's weddings, they would not be late for a market opening or a market closing. They would stay for the duration of the trade. I learned how they operated the market, how they watched market prices so sensitively. But more importantly, I learned from these great investors that there's a saying that in Wall Street at least, that if you want a friend on Wall Street, go get a dog. But in Dalal Street, there's a very open system. They encouraged young value investors like myself to learn. They shared information very freely, and because you could meet every day, the information was easier than it's today. Of course, today also we meet, but the bonds that we formed at that time were meant a lot to me. And the most important thing I might warn your listeners about is during the crash when there was a bomb that blew up the BSE building. We were all trading on the ring in that particular day, and we were all together 15 minutes before the bomb blast off. And two things, at that time the Indian market was only the BSE, the NSE had not been born yet. So the entire financial community was congregated in the ring. And thanks to the fact that the Larsen & Toubro, God bless them, built such a strong building, such a strong institution was there, that the bomb could not damage 2 floors higher where the ring was located. So the entire generation of finance people in India survived. I mean, that could have been an untold catastrophe because the entire generation of investors was located in those premises during those times. So that was, a very lucky break that we all ensured. But, the traditions of the BSE continue after that. The tradition of innovation, tradition of sharing information, and tradition of spreading wealth, which is what the capital markets are all about always.
Wow, that must have been a very memorable experience. Ashish, what about you? What has been your own
for me,
most memorable experience? Go ahead.
Yeah, just let me clarify on the brokers run exchanges. Today, BSE is not run by brokers. Today, brokers own less than 40% of BSE.
Oh, okay.
And none of them sit on the BSE board. In fact, BSE board is more eclectic than any other exchange in the country today, with ex-Chief Justice of India sitting on the board, 2 Padma Vibhushans, 3 secretaries to the government of India retired. So it's one of the most influential boards and professional board for that matter. No broker sits on the board since 2011. And so I have seen a broker run sort of board when I was not in BSE, but then when I joined BSE, there were 25% of the members, 3 members were elected to be on the board, and 2011 onwards there is no member on the board. So in fact, decision making is completely professional. There is no broker involved. Brokers are like basically the distributors of the exchange, and they are important part, but they don't interfere in running of the exchange today. And so it's a misperception that probably some people carry, but today BSE is totally professionally run board and totally professionally run exchange.
Okay, Ashish, thanks for clarifying that point. Ramesh, let's talk about some important milestones. Which was your first trade on the BSE and which has been your most satisfying trade in last 30 years?
There have been many, of course, but if I'm not mistaken, as a historical anecdote, I remember the first trade we did was like 200 shares of a company called Thomas Cook at that time. It was trading at some 30 crore market cap or something similar. That's just what my memory recalls 30 years back. Among the most satisfying trade, I mean, my wealth has been made with the BSE because I never traded on the largely I have not traded on the NSE or on Calcutta Stock Exchange, which many players do participate in. Now I do, but largely my trades have been in the BSE because I am a member of the BSE. And I think the first trade that stands out, which is very romantic for me, was when there was a company that had computerized the BSE, as a matter of fact. The BSE board trading was computerized by a company called CNBC, and that company was listed on the BSE a few days later. And no one understood that, and we were getting this whole company for a market cap of 30 crores. I remember making a big outsized trade in my personal portfolio on that, and the stock today by comparison is almost at 4,000 if you account for the splits. So that was the first trade. Before that, no one knew me in the market. After that, no one could ignore me in the market. So that was always a very special trade for me.
Okay, that's interesting. You know, Thomas Cook, you were telling us that you did this trade at 30 crores. The market cap of Thomas Cook is now what? More than 6,000 crores. So you've come a pretty very long way. And the CMC as well, almost 6,000 crores now in terms of market cap. But what about the market cap of the BSE as a whole, Ramesh? I mean, it's currently around, close to $2 trillion. Where do you see it heading?
I mean, just to give you a comparison point, I think the BSE Sensex in 86 was 100. When I started, it was 500, 600. And today it's closer to 30,000. So over periods of time, we have consistently compounded at 17% per annum, and an extraordinary record of compounding. And in India, as you know, dividends and long-term capital gains are tax-free. So the extraordinary amount of wealth has been created over the last 25 years through so many events. We've had the collapse of governments, Kargil, plagues, floods, through so many events that have taken place in India over the last 30 years. The Sensex has regularly compounded at, 17% or so over the last 30 years or so. So there's reason to be optimism even today. 2 years ago, a new bull market was born in India. When the market first got the sense that there was change in the political landscape of this country, a new bull market was born in the depths of the depression when the rupee hit 70, 72 to the dollar. A new bull market was born. Since then, the market has been progressing very well. And the difference I find now is that in the 90s, during the Asian crisis, during 2007, during the 2000 tech bubble, all emerging markets were painted with one brush. And today you see a market as sophisticated as China has collapsed $3 trillion, which is more than the market cap of the entire BSE. And yet there is no sense of panic on BSE. In fact, yesterday's sell-off, I would respectfully say, it was just a sympathetic move. There is no underlying fear in the market, and the bull market that began 2 years ago is alive and well. So it's hard to predict where the market capitalization will end, and I don't want to be facetious, but it will be a lot higher. And I think people who are not investing in India, need to consider the great businesses that we have listed and to start opening their eyes to equity, because it's the most liquid, gives you a dividend, and one of the best asset classes you can get into compared to, say, real estate or gold, which have their own drawbacks. So I would hope that they would take advantage of the fact that equities are a tax-free alternative to compound your money over time.
Okay, by the way, the market are now slipping fast. 83.25 is what we have on the index, so not looking good. In fact, if you take a look at some of the stocks, TCS is now down almost 3% and Infosys is also dragging. So the last bit of fall has come purely on account of incremental weakness on both TCS and Infosys. Tata Motors as well, down about 2%. So some of these stocks are not looking good. Let's see where things go. Ashish, I'll come back to you in a bit, but since the market is falling, let me just ask one market question to Ramesh. Ramesh, you did say that yesterday's fall was not alarming, but where exactly are we in the current bull market? Because from 9100 we have seen quite a bit of slip.
Typically, Joe Granville was a market technician he died a few months ago actually, well into the 90s. And he wrote a very pioneering book on technical analysis where he divided the bull markets into three phases. Phase 1, phase 2, phase 3, and identified characteristics of each phase of the bull market. So I think the first phase was completed the day the Modi government was sworn in. That was the end of phase 1. So I think we're in phase 2 of this bull market. This is a long productive period. It will play out not only in terms of number of points but also in time, and typically I have seen over my many years of experience and studying different bull markets, once the forces that ignite a bull market are there, the market will go up. All these things that happen, China, Greece, are mere punctuation markets in a long sentence. So I think the bull market is in the second phase. It still has lots of ways to go. By the time the third phase comes around, there will be people warning us not to invest in the stock market, and the public will be investing. So I think right now the public is in the people who are coming in are early investors in the market. They are seeing gains. A lot of healthy money is coming into long-term domestic funds. So from all indications that I can spot, the market's in fine shape and should remain there for some more time to come.
Okay, Ashish, now let me ask you a bit of a tough question. NSE has clearly stolen a march over BSE over the last many years in terms of market turnover, maybe even in terms of technology, or at least in terms of perception. What is BSE doing to counter that?
See, BSE is running its own race. It's not in race with anyone. And for me, BSE has to worry about being relevant as a stock exchange in terms of the nation's needs. Today, if we don't solve the nation's problems, then as an exchange system, whether BSE, NSE will become irrelevant. And for me, the question is, even for CNBC for that matter, is that what are India's needs today? That is job creation. And if India has to create 30 crore new jobs over next 20 years, India has to create 1.5 crore new jobs for next 20 years, and every year 1.5 crore new jobs, and that can come only by channelizing savings of the householders into productive capital like equities and debentures and so on and so forth, not by trading for the sake of trading. So when you measure the trading, probably BSE may be behind, but in terms of any time there is a capital raising that comes, like yesterday or this today listing of Manpasand beverages, BSE has always been at the forefront. So for me, BSE is running its own race, saying how do we remain useful to the society, how do we raise capital for the entrepreneurs, how do we get risk-free returns to the investors, how to get more people to participate rather than getting 5,000 people to trade incessantly. And that is where I think the perspectives have to change from your side as well as our side.
Okay, one final question then before we let you go, Ashish. It's a very difficult time for a lot of stock exchanges, stock markets globally. I mean, as Ramesh Damani was pointing out, there's complete panic in the Chinese market. Yesterday we saw the NYSE, halt trading for some technical glitch or the other. But in our own markets, we've seen a lot of stability in the last many years. How does the BSE ring fence itself from, possible internal or external shocks?
Basically, I think as somebody said, the cost of freedom or price of the freedom is an eternal vigil, and so we need to be on our toes every moment, whether from cyber attacks or from things going wrong on their own or by mistakes, even on risk management, on over leveraging, over trading, and so on and so forth. So basically for me, that is giving the transactional platform. But there are other issues relating to corporate governance, there are other issues relating to giving instruments to the society that the society actually needs. So today in 140 years, BSE has given you risky instruments, that is equity. They are reasonably volatile. But in last 15 years, we have given even more riskier instruments in terms of currency derivatives, equity derivatives, interest rate derivatives. Now, how do we give the risk-free instruments so that more people, today in 140 years we have got only 3 crore investors, 20 years of automation, we have not added even a single new additional investor. Some people have come in, but more people have gone out. So effectively we are back to where we were in 1994 when automation started in India. And for me, those are the questions we need to answer ourselves. And also we need to tell society saying we need more investors. How they come is because of the risk-free instruments, not for the sort of trader, because traders come, lose money, go away. Investors, if they kind of remain in the markets, then we can bring them to the equities and so on and so forth.
All right, Ashish, thanks a lot for your time, and congratulations on 140 years, and we wish you many more years for the grand old exchange of India. Ramesh, thanks to you as well for patiently waiting by and answering all our questions on BSE and also on stock market, which by the way now is trading at the low point of the day. Thereabouts 83.36 is what we have.
That would have been fun, right? Anuj, the open outcry on a physical floor. I mean, I don't remember that time, but it would have been a good experience. A lot of chaos, but
yeah, I mean, my limited memory is watching it on news channels. Sonia, every day, in the evening when the news at that time there was only DD News, of course. They would show the shots of the trading taking place. Yeah, I mean, would have been fun.
We've come a long way since then. But our closing bell money control question of the day is: do you see TCS's Q1 earnings positively surprise the market? Because we're going to know in just about 2 hours from now. Log on to moneycontrol.com, post your responses there. We'll read out some of the most interesting responses post 3:30 p.m.